Yeah, morning, Trace. We look ahead now to the FOMC meeting and also to the US Treasury's QRA, the quarterly refunding announcement. Just have a look at that mix of funding going forward in terms of bill issuance and also coupon supply. But what we've seen on the session has been tighter financial conditions which have manifested. A lot of people have talked about the idea about this being driven by the data flow. We've seen consumer confidence numbers coming out and the index fell 6.1 points to 97. That's the second reading below 100 we've seen since August 2022. That was the lowest reading in itself since July 22. We also saw the Chicago PMI numbers coming out. They were the lowest there since November 2022. So again, some pretty poor numbers playing through. We saw the employment cost index, which we know the Fed have referenced before. We know they look at that pretty closely, and that came out at 1.2% growth. Now, that was above the expectations of the market by about 20 basis points. I don't think there was any analyst who even called that number, to be fair. And you can see the reaction in the bond market. We saw two-year treasuries trading from 496 with a lazy spike up to 502, so about 6 basis points. They settled on the session at 5.03%. We saw 10-year on the long end of the curve up 7 basis points, closing at 4.67%. And if we have a look at the real rate story, which I think is really important to risk assets at the moment, the dollar and gold and various factors, we saw 5-year real rates up 8 basis points on the trading session to close 2.28%. That looks like it wants to sort of break out topside and sort of move a little bit higher in the short term. So really important about the real cost of capital playing through. If we have a look at the interest rate story on what we've seen from the ECI numbers, we now see about 28 basis points of cuts being priced in by the end of the year. We lost about 6 basis points on the trading session, so it's a little bit of a repricing playing through. If you have a look at SOFR and interest rates for what's being priced for 2025, we priced out a couple of basis points. We've now got 64 basis points, so just under 3 rate cuts being priced in for next year. So in that dynamic, we did see the US dollar having a field day effectively. I mean, it needed a bit of a shot in the arm, and we've seen that happening playing through. The US dollar has rallied against all currencies. We've got the Dixie up 70 basis points, but certainly big gains playing through against the Chilean peso, the Kiwi, the Brazilian real, and also against the Australian dollar, where the Aussies trade down to a low at the moment of 64.72. Obviously, a lot of focus on dollar yen recently, given the intervention we've been seeing, and we've got some sort of firmer numbers playing through on this overnight. But we've seen a high coming through 157.82. So, those lows that we got post intervention seem, in the rear view mirror at the moment, and we sort of climb high going into that Fed meeting as well. Now, the equity story has been a tough day at the office for longs. We've got the VIX just trading shy of 16% at the moment. That's added one volatility. But if you have a look at the cash session that we've been seeing, we've got the S&P down 1.6%, Nasdaq down about 2% or so, just under 2%, and we've got also the Russell down 2.1%. You can see here from the intraday tape, that the markets closed pretty close to their lows. Broad-based participation to the downside. We only saw 11% of stocks on the S&P higher on the trading session. All sectors were lower. Healthcare was the outperformer, and that fell 0.1%. But certainly tech under pressure, consumer discretionary names under pressure. Energy was down. The worst sector there, and we've seen the crude price down 1.3%. So really no sector being spared. On that move that we've seen in real rates and the dollar strength, we have seen gold down 2.1%. Interesting trades that we've been seeing. That support level that we recently saw around 23.05 has given up. We've seen price close below that level. It looks like the sort of next downside target that we're looking for is around 22.60. That's the 38.2% retracement of the rally that we saw between February and April. And it's also around the sort of 50-day moving average as well. So whether we can trade down there, obviously, is really going to depend on the reaction to what we see in the Fed meeting ahead. We're also seeing Bitcoin working as that kind of high beta risk asset play. We've got Bitcoin down about 5%, Ethereum down nearly 7% as well. So, a lot of that sort of high beta play getting under pressure. In the aftermarket, though, we have seen a number of earnings coming through. We've seen Amazon, which is the market darling. Everyone owns that in their investment portfolios. That stock's up 2.7%. So a bit of a whippy ride in the post-market session, but the stock, as I say, at the moment, up 2.7%. We've got AMD down about 4%. Supermicro having as you would expect to see that volatility playing through. That stock's down about 8%. We've seen Starbucks coming out as well. Now, if we have a look at Nasdaq futures, since the cash market closed, they're down about 0.3%. So again, it just leads weight to the belief that we are going to see Asian markets under pressure. We've got SPY futures in Australia down about 1.2% at the moment. So, giving up a few of the gains that we've been seeing. We expect to see a bit of outperformance from Hong Kong, but certainly it's going to be a tough start to play through. But as I say, big focus on the session ahead, on the Fed meeting. How does the market go into this? I think a lot of people are expecting a bit of a hawkish turn. We'll have to see if the Fed can deliver that relative to market pricing as well. So another whippy ride for traders to deal with there.